Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look on the euro currency again. So today we prepared compound research. So because on the euro currency, as you can see, well, it's not too much to talk about. Everything stands approximately the same manner as it was yesterday. So market holds well at the lows that we have marked here on the daily chart. And as you know, these lows have the exceptional importance. The direction of the market, and market has to hold above it to keep any chance on the bullish continuation and the bullish sentiment, bullish scenario. Breaking down these levels means that market is going below 1 or 6, and it could be a major continuation of the bearish trend on the monthly chart. That is the bet that we have on the table. And currently, maybe it makes sense to talk not only on the euro, but in general how the overall situation on the markets right now is forming. Because recently I've got a lot of different signals from the international assessment of the current situation. So you know, the Goldman Sachs suggests the drop of the market. Speaking on the DAX, it should be somewhere 70-75% drop from the recent top. I will show you a bit later. That's important. Overall situation that we see here on the different markets also makes us think that, well, that's some artificial rally stands on the stock market, because it really lost the touch with the reality. And we have talked about it yesterday and also in our weekly report, that the fundamental data shows that no impact on the real economy has happened yet, despite no measures from the Fed, these huge liquidity injections. So nothing has changed. So the industrial production, output, manufacturing, so all this stuff, well, stands in a depressed situation, and we do not see any, especially in the heavy industry. So we do not see any significant changes. While on the stock market, you could see some rally that's played back to almost 50-60% of the drop. So how it is possible if the oil companies that actually worked in the real economy sector get no relief of the current situation? But stock market indicates that they do. Well, it means that this is artificial divergence, as we said. It's mostly based on the huge liquidity that international companies that put on the stock market and forget about it. So the Fed gives them the liquidity to support the population, to support small business, making loans, some other stuff. But that's difficult. That needs to calculate the risks. It makes them meet with the credit risk and possible default and bankruptcy. It's other stuff. It's much simpler. Just put in the stocks and forget about it. Well, and here partially we see this process. So actually the old bubble that was formed before the 2019, it was mostly due to the huge liquidity injection and that was provided by the central banks. And different ways they have found the road and way on the stock market. And about this moment talks not only me, Goldman Sachs, as I said, and also, guys, yesterday I've got the advertisement mail from the Napoli Academy, so I will show you. That's what they write. Also, they have some doubts on the perspective of the upward continuation. So you can see this, what they're reading, that's despite all the unemployment numbers, worldwide government lockdowns. You see the rally. Wall Street's trading higher day after day, week after week. So Wall Street totally out of touch in reality. And next day, they write that DJ has dropped almost 500 points, and they're asking whether the current top on the S&P is the top where a market could turn down. They actually talked about it. So as you can see, what I'm sticking my head out to suggest that we could be making yet another major market turning point today. And in postscriptum, he writes, Joseph Sound of the Napoli Trading Academy. So I hate to say this about the COVID-19 situation and its impact on the markets and the economy, but the worst is likely yet to come. So that's the opinion of the Napoli Academy. They will provide some background material for that. But if we will take a look at what's going on in the euro currency and stock market, so take a look on the DAX. We yesterday also talked about the DAX. We said once DAX will start dropping, euro will get the support. Indeed, yes, the market was dropping. Today open will also be with a minor sign. As a result, as you can see, euro has climbed a bit higher. Market stands at the daily weekly agreement resistance. It's OP 1158. So speaking on the S&P, what's Napoli speaks, take a look on the S&P. The same story, A, B, C, bottom, OP, right at the major resistance. They are asking, well, whether 2930 will be the reversal point. So they suggest that really could be the point where market could start dropping back. So here, usually at least the 50-60% pullback should happen, but Goldman Sachs, as I said, expects approximately 70-80%. So in terms of the DAX, they suggest that market should drop somewhere to the 83-85 area. So on this level, so this is a significant suggestion. Now, it's more interesting if you'll take a look at the crude oil. On the Brent crude oil, you could see the pullback, but I'm really have to worry about this rally recently has happened because, well, guys, it's only blind could miss the possible free drive buy pattern that's forming here. As you can see, this bottom stands very accurately. Here's 127 on the previous bottom, and if you will calculate the extensions 1618 from this one and 127 from this one, you can see that they coincide with the tight range 1140, 20, 12, 50 area. That could be where a market could go, especially on the light of the events in the real economy. So as we said, on the real economy data indicators, it shows that no reversal has happened in the global economy, and that also could trigger another drop on the crude oil market. The one problem here, guys, I have on the crude oil that in the intraday charts I don't see really yet the clear bearish reversal pattern. So we have some XOP right here. This market has completed from this A, B, C bottom. XOP, but here we don't see clear bearish reversal pattern. But that is just the moment in the puzzle. And we do not trade the crude oil, but it just could tell you that something is ready to happen in markets, and that could mean, why I'm talking about this in general, is that on the euro currency in turn, it means that the possible upward action that we are talking about is not hopeless. It really could happen, despite that recently, if you could see this, another grabber has been formed. And that's, by the way, the reason why I'm talking about is because do not rely on this grabber. Overall situation on the global market suggests that it's really could be an important turning point, at least in the short-term perspective, that could trigger the euro currency higher. That's why I am currently better trust in the belief in this bottom rather than taking position in these grabbers because they stand to be in contraposition to what we see on the stock market, for example. On the 4-hour time frame chart of the euro, we have everything the same story. Market keeps very accurately support we discussed yesterday. Nice pullback here. So now those of you who long positions, now you could breathe freely and move stops to the break even. Finally, just see what will happen here. On the hourly chart, well, our guidance triple to buy works perfect. You can see this ABCD OPs, my minor breakout for the 618 level due to the reaching of the OP and you can see rally. Now you can see the possible retracement. So if you consider taking the long position, it could be another chance today. For example, this great rally, this could be some kind of ABCD retracement here, minor retracement from this projection. Not the whole, but mostly from that one. Here you also could consider possibly taking the position somewhere around 1.25, I suppose. Well, And let's keep watching what will happen, because it seems that on this week, maybe as maximum on the next week, something should happen. So market either will continue in the way as it stands, I mean the stock market, and it means that the euro will start dropping again, or we really will get a reversal, which should provide fuel for rally on the euro. And in this case, the doubts of the Chodnapoli Academy also will be not in vain, and it's probably they also could be right in the current suggestion. So let's see what will happen.